Good afternoon. This is Chris Brecher with the Chart Patterns Mastery / Simpler Trading free video. What's today about? It's about keying off of internals before a government report. What do I mean by that? Well, for days we've been talking about the DBA. That's the agricultural ETF that includes the cottons of the world. So this ETF, as you see, has gone straight up ever since the first of the year, straight up. So our theory was that if that went straight up, the CPI that was going to print this morning was going to run hot because it shows what happened in the last month, and that's exactly what happened with this. Now, combine that with the ES, which is also outperformed the bond market. So right down here is the bond market. Up here is the ES. So the whole theory was if the bond market got torched because of the hot CPI, then this S&P was going to go down, which is what it did. Now, that being said, I'm going to show you some good news and some bad news. So the first is the good news. The good news is stock market stopped right. You can't tell on that. I'm going to remove the drawings. There you go. Major support. Prior tops and bottoms become support. So just that's the way I look at it. When all heck breaks loose, I go to the tops and bottoms. Now, yesterday, we posted that we were getting bearish because bull flag stopped working, which is what happened. Now, you got that nice rally on the close. Guess what? Now you're at this resistance. Then you could have a nice rally to here, another 20 points, sure. But all of those areas now pose really formidable resistance. Now, the other thing that's a problem with the overall markets, so that's the good news. You stopped at support. The bad news is you still have this massive divergence between the S&P 500. And by the way, you see the support right here. See that support. On the other hand, yeah, the bond market is all the way down here. It hasn't had a bounce, not even a bounce. So you still have the divergences, believe it or not. You have the Russell getting nailed today down to support. And now I want to show you something else. We're going to take off the ATR trailing stop. And all we're going to have up here is a daily 20 moving average. When markets start to diverge, I like using the 20 moving average. So right here is what we call that everything's going together. So convergent, whatever you want to call it, but they all went together mode. So now, though, you're getting the divergent mode. So what are we talking about in here? This is called like concurrent mode, just to let you know, where all the indexes are going up together. Now you have the Russell right at that purple line. You have the NASDAQ it went right to the purple line. The ES went right to the purple line. That's all fine. How about the Dow? Well, the Dow got under it barely. As you see, the Dow had a confluence of that 20 moving average and price support. This is not where you want to look to short the markets. So just keep that in mind. How about transports? They held it barely. But the problem with all of this, the big problem, is the bond market's decisively under it. So you have to see the bond market really come back, I think, for this to really go and try to fill these gaps up in this area. So just keep that in mind. Now, that being said, that doesn't mean that I'm not going to look for long ideas. I'll look for short ideas as well. Keep in mind, we still have the go-go at super micros going up. Before you think that these are going straight down, keep in mind they're in big old uptrends. They're still in big old uptrends. You need to see some kind of semblance of rollover. And then I like drawing a trend line like at a 45-degree angle before I even think of shorting them. So just keep that in mind. Now, there are a couple of areas that I'm looking to buy if the bond market stabilizes. Now, you might say, well, why aren't you buying Apple first? Well, that's a good question, maybe. But I still like this rotation trade But it would have been nice to see the XBI have more of a rally than this. It got nailed today. Really nailed. A lot of times after a big rally, you don't like to see a gap down like you just saw. So it got gap down from resistance. As you see, last time it gapped down, it took a month for it to repair that damage. In fact, on the way up, you didn't get a gap down. Isn't that amazing? You didn't really get a gap down. And this is a gap down. This is a gap down. If I'm going to play the XBI, the Biotech index, I have to find stocks within it under two conditions. Either a stock that opens down near support, like you saw Rhythm today. Wow, that's a real print. That's a real print down under 45. So I want to see either a panic down to support, followed by some kind of semblance of a bull flag, or I want to see some that refuse to go down today, that retain their bullish structure. And that's what I'll be showing. We call them the box charts. We're going to start calling them the nightly charts because most of the biotechs aren't showing it. But the box charts, like I said, we're going to call them nightly charts. I post Sunday night, Tuesday night, and Thursday night, and I'll have some good ones to show tonight. So the first thing I'm going to be watching tomorrow is definitely that bond market that refuses to rally. So stock markets, as long as the bond market doesn't rally, I will look for bearish patterns like that. If I don't see them, I'm just not going to trade them. We're going to wait for our directional tells. So have a great night. Talk to you later. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.